guys? Salute to all y'all watching. This is BGFX. I'm coming at y'all with a brand new video. Today what I actually want to talk to you guys about is EURGBP. Ended up kind of looking at this trade on EURGBP, about 30 pip profit trade, and this was a trading with the trend type of situation. Now, if you've been following my content for a minute, if you're a part of my academy, you know that I trade based around catch and reaction to key levels of market structure. So what I mean by that is like reversals, all that good stuff. That's usually the way I trade. But during this coronavirus, man, you'll notice that the market is moving with a purpose. You'll see breakouts when you least expect it. You'll see reversals when you least expect it. So in this case, I wanted to catch a continuation. But I'll go ahead and kind of walk you guys through this whole trade on EURGBP and how you could have actually went about catching this in real time. So without further ado, it's been your boy BGFX. Let's get into the video. I'll catch y'all in a minute. Okay, so we're gonna go ahead and start this on the daily time frame. Now, when I'm looking at the daily, this is more of a long-term view of the markets. But one thing I really noticed is that price was kind of consolidating around this zone. Okay, price consolidated. It kind of met this area of support here. And we can see that our moving averages, the 20, 50, the 100, and 200, they were very stagnant. Once we seen price push down, bounce back, push down, bounce back, it was very stagnant. Okay, we can notice that all that was very slow. Eventually, we had a breakout of the trend line. And then what happens when we look a little bit closer? We have a breakout of the trend line. Then we have a little bit of slowdown in market movement. We got two bearish candlesticks. But overall, these candles, if you look closely at the candles, these were very volatile candles. So at one point in the day, price was at a high, and at the next point in the day, price was at a low. Okay, and this was very volatile. So first candle eventually closes right here at the bottom, opens up, and we eventually have price come all the way up to test this level. Okay, up here. Go ahead and draw that out. Test this level up here, and then it rejects, closes below here, opens up, and finds this little mini kind of like double bottom. Obviously it's going to be hard to see if you're on a daily time frame, but you can see the two wicks showing rejection. So we have this extremely bullish candlestick, which is showing me that now our buyers are starting to be in control. So we see another pullback, we see another push down, just as we previously seen here. Okay, it's just like repetition, especially when you're looking at the long term. So we see the breakout, we see a slowdown of candlesticks, we see another breakout, we see another slowdown of candlesticks. So if we look right here, what does that mean? That means we're potentially looking for more buys and more breakouts, and we would only be entering the markets if we actually see price give us a reason to. So look at this a little bit closer. Looking at it close, we can see, you know, kind of what these candlesticks are doing. And eventually, you see all the candlesticks broke out of the EMAs. Okay, these EMAs show us our direction. It shows us the momentum in the markets. So when we see price come out of these EMAs and pulling back to them, that is showing us that now price is trending upwards. All right, so in this case, I'm looking for a breakout to the upside. And once I see my breakout, I then want to see some type of pullback in this market structure. So of course you see the break. We see price kind of find this top here. Okay, we see this mini area of support. You could even bring it probably all the way back here, and it would still make sense. But see the pullback. Price finds mini support here, and then overall shows value. Area of value to our EMA combined with our support. So next thing I'm going to be doing is going to the 15-minute time frame. I'm sorry, the 5-minute time frame, and I want to look for some break of structure. All right. So overall, we see that the market's trending up. We see that there's breakouts, and we see that bullish movement is kind of taking control here. So I just want to take a closer look, and basically we see the breakout. Now, how do we actually know when the best time to enter is? So we see the breakout. We then want to find our lowest point. All right, we want to find our lowest point before price decided to go to the upside. Now, real quick, I just want to point this out. We have this upside movement, kind of like a little channel beginning to start here. You see we got value here, value here, trend line combined with resistance, and then we see a breakout. So at this point, I believe price will probably show a little bit of downside movement, but let me show y'all why we would have actually entered for a buy here. Looking on the 5-minute, we see this extremely bullish wave here of candlesticks, and the bullish wave breaks out of our resistance, showing us that buyers are starting to catch control. Now, a lot of people will look to buy on the breakout and they will enter on the next candlestick. That is not what I do. I wait for the breakout and I wait for this pullback, then I will look to enter. I'm a pullback trader. I use Fibonacci's when I'm catching reversals, when I'm catching continuations, when I'm catching literally anything. I'm always looking for some form of pullback, because for me, that's just more confirmation in my trade, and I like to trade on the safer side when it comes to catching better accuracy overall. So look, we had the breakout of market structure, and then we have a pullback. All right, now what happened here, we had mini support. So our initial push of market movement would have started here, and it would have came all the way up to here. All right, this wick, because this wick was the highest point. We call this a swing high, we call this a swing low. This wick here was the highest point before price came down for the pullback. All right, now of course it came down from this level, but if we look, this wick on the right, go ahead and get my arrow. This wick on the right was higher than this wick on the left, which identifies the one on the right as a swing high. So we wait for the pullback. Now I want to wait for the pullback to this 0.5 to 618 level. Okay, now just like in the previous video I said, you can decide to only enter on a 618. Sometimes I'll even enter on a 786 when it comes to other market circumstances. But when it comes to trend continuations and pullbacks, I look to enter 0.5 to 618. All right, so breakout confirmed, support resistance confirmed, pullback to the 0.5 to the 618 level confirmed. So now we are entering. All right, bullish movement through our EMAs, signifying that this upward trend is very strong. Look for the pullback. We're entering. Take profit around our 272. You can even zoom back and see. All right, find out if your Fibonacci levels are around support resistance, because support resistance is very powerful. So 272, take profit somewhere around this area. You could even take it up to here if you want. Sometimes you could even close out half and then let the rest run. All right, stop loss in this case is going to be below the 618, and I'm going to go ahead and throw it on to the 786 level. All right, and now you might be wondering why am I putting stop loss on a 786 level? Well, if we look close here, this is another form of support resistance, and we also see our EMA. So in order for price to break through and stop us out, a major momentum change would have to happen in the markets, because the EMAs would have to curl up and price would actually have to kind of switch directions and come down. But overall, this was like a ABC 1, 2, 3 type of move. You know what I mean? You just have to look at the higher time frame, look at the daily. All right, look at the daily, and you see price closing, and you see a breakout, you see a minor pullback, you see another push up, you see a minor pullback. So what do you think happens? It's literally a pattern. Big candlestick, small slowdown, big candlestick, small slowdown, and then we're looking for more reaction. Now I know I have a lot of arrows, but this is just all from looking at the lower time frame. But overall, this was a very nice trade setup. You know, it's just all about being adaptable to the markets. So for example, let me just go ahead and point this out. Let's go ahead and say that you wanted to catch a sell off of this. If you would have entered on a sell, this would have been a losing trade. All right, this would have been a losing trade. What do you actually do once you lose this trade? You wait, you adapt, and you see what's going on next. Once you see that the market didn't reverse at the top, you see the breakout, you see the pullback, now you're entering on a trend continuation. As long as it enters your, and if it meets your rules, okay? As long as it meets your rules, guys. That's like one of the most crucial things. One of the most crucial aspects as a trader is you're trading based around a systematic approach. A systematic approach is very powerful, because you approach the market with a purpose. You don't just approach the market and enter when something looks pleasing to the eye. You enter when there's a reason and when your rules are met. So in this case, you know, say you'd have lost a trade, that's okay. Stick to the plan. Boom, pull back, enter, profitable trade. This would have been a small loss. This would have been a big win. And sticking to the plan and staying with what you set out for yourself would have been the best move in this case. So this was EURGBP, guys. This was a little analysis. I didn't take this trade myself, but I was watching it as it occurred. And I just wanted to point this out to you guys because it was overall a very clean and very nice trend continuation setup. Because as you guys know, I trade trends, I trade counter trends. I specifically trade around market structure. All right, so that goes for. I hope y'all enjoyed that. It's just a little recap of EURGBP and how you could have capitalized on some good movement with the pair. But real quick, before I wrap this video up, I just want to say BGFX Trading Academy is currently on sale. If you are looking for Forex education, if you are looking to take your trade to the next level and open your eyes up to how to truly profit in this market, then go ahead, hit the link in the description. One-time fee to enroll, you get lifetime access to everything. And one of the major things about my academy is I always throw new content on it. You go to any one of my students and ask them, they will literally tell you that content is always put on there, and I'm always looking to help them improve at all times. You know, when I'm not trading, I'm working with them. All right, so yeah, man, overall, if you're looking for a future in trading, if you want to improve with a like-minded group of people who want to succeed, then join this family, man. We'd be glad to have you. Real soon, I'm going to be doing a full revamp to the academy. So you'll have access to every strategy I use. You'll have access to how to approach the markets like a pro. You'll have access to risk management, the best way to risk your money to grow it to an exponential level. You'll have access to all that. All right, guys. Forex Bible is also releasing my ebook, okay? It's going to be showing you how to separate yourself from the mindset of a beginner trader into the mindset of a pro trader, because when it comes to being in this Forex industry, mindset is crucial, because mindset is what will make you or break you regardless of your trading results. All right, guys, without further ado, we'll go ahead and wrap this video up. Hope y'all enjoyed. It's been your boy BGFX. Salute to all you guys watching. I'm out. Peace.